Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You are watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. It was a historic day of records yesterday with the Nifty, Sensex, the Nifty Bank and the Mid-Cap Index clocking in newer highs on the back of BJP's victory in 3 state elections. Will the rally continue today? We will tell you all, but first up the top headlines we're tracking for you this hour. The record rally on Indian stocks is all set to improve further on Tuesday as pent-up demand for quality blue chips remains unmet on Dalal Street. The Nifty is likely to get more admirers as investors buy relatively underpriced large caps instead of mid caps. Traders will focus on stocks that are breaking record highs as momentum players push up volumes and prices in select sectors. New investors are seen entering equity funds as they participate in this bull run via less risky routes. Good morning to all our viewers and good morning to you, Shail, as well. Well, the Nifty had its best single-day gain yesterday since October 2022 and the index not only scaled past the record levels but also closed above the 20,500 mark. 44 out of the 50 index constituents ended with gains, so it was a fabulous day. What do we expect on the Nifty today?
Good morning, Sakshi, and a very warm welcome to the market, which is now exhibiting Modi premium when it comes to stock prices, when it comes to indices, and when it comes to thoughts as far as where the markets are headed. Let's get this straight and upfront. Sakshi, yesterday's 2% gain, actually 2.1% gain, propelled the Nifty, of course, to a fresh high, 20,686. But what was interesting is that the index closed at its day's high. Remember, it opened at 20,601, then dipped a bit as people booked out a lot of option gains. And then, you know, it's the recovery that has started. And the recovery is led by frontline counters. Now, how do we gauge that? That's basically on delivery patterns. If you look at the counters of HDFC Bank, if you look at the counters of ICICI Bank, you see the average delivery has increased by 25%. I'll give you an example, and of course this is accompanied by a very sharp rise in volume as well. See, an average 1 month delivery for HDFC Bank is only 60% of total trades. Yesterday the delivery was 75%, which is 15 percentage points when it comes to the actual average number. Now, this is also accompanied by a very sharp rise in volume. Yesterday, 21.88 lakh shares of HDFC Bank were traded compared with a 1 month average of 14 lakhs. So, you have a 50% rise in volume and a 25% rise in delivery. And on average, you see that happening in most stocks as far as the index heavyweights are concerned. SBI, ICICI. I'll give an example, Power Grid. Average traded delivery is 70% every month, and yesterday it was 81%. And can you believe the volume doubled to 2.8 crores versus 1.4 crores. So this is what is happening, Sakshi, in the market, that people are now doing delivery based trades. Therefore, the market is now buy and hold. It is no longer a trading market. If you can, you know, withstand maybe a month or so, you will see better prices on the Nifty rather than, you know, doing talwarbazi on a hourly basis or on a daily basis. So it's a buy and hold kind of a market. And if you look at how options data is, a very strong support is now emerging at 20,700 and 20,500. These are levels where a huge amount of shorts have been unwound. A lot of put writing is happening. So this is the base, and then you see 20,900 and 20,100 opening up on Nifty as far as options trade are concerned. But if you are a new investor, just buy an equity diversified fund, buy a flexi cap fund, just hold it for a long period of time, invest monthly. This is a rally to be ridden, Sakshi. The Modi premium will now only get bigger and better.
Fantastic. Let's understand what happens to the Nifty Bank now. Especially the Nifty Bank emerged as a star performer yesterday, with the index rising over 1,500 points, also registering its best single day gain since April of 2022. A last hour surge actually took the index past the previous record high of 46,369, and all the 12 index constituents also ended higher as well. Shail, does it really look like all the frontline banking counters will now begin to participate and take this next leg of rally higher?
Absolutely, Sakshi. And the star performers of yesterday were banks, but the superstar, the supernova, was the Nifty Bank, and this was a long time coming. I'll give you an example. See, till about 1 week ago, the Nifty Bank was up just 4% compared with the 11% rise on the Nifty on a year-to-date basis. Now suddenly you have this 3.6% rally yesterday, 1,600 points added, and again the index closed not only at a record high, it also closed at its day's high, which means pent-up demand is coming. Now look at ICICI Bank. This was the top contributor to the banking index yesterday. 1.28 crore shares are traded on an average daily basis. Yesterday the traded volume was 3 crore 31 lakhs. Of this, 67% was converted to delivery. The 1 month average is 55%. So the same is true for HDFC Bank, the same is true for State Bank of India, the same is true for to some extent of course HDFC Bank. 75% versus 60%. So these indices are headed higher, and the best way to play them is to take a positional call. If you don't want to do individual stocks, just buy the banking Bs. This is a Bank Nifty ETF. We spoke about it somewhere in late October, when it was trading somewhere like 395, 380 rupees. Now it is at 472 rupees. That's the best way, Sakshi. The least risk, the same return, and it's a delivery trade. So you don't have many problems associated with futures and options. Sakshi.
Right. And in the F&O space, any particular stocks that would be on your watch list, Shail, today?
Sakshi, any particular stock? It is the whole setup that I am watching. Yesterday's advance decline ratio on F&O was 153 futures versus 32 that slipped lower. But the two that are doing fairly well, Coal India, and mainly on account of short covering. And this is a rally that has legs. The government of India has informed that Coal India will ring in a top line of 1,42,000 crore rupees for the financial year FY24. And at the moment, if you see how it's structured when it comes to the F&O space, smart gains 2.5% higher, smart rise in volumes, and this is on short covering, which means that bulls are now afraid. So Coal India is something I am looking at on the long side. And again, I repeat, these are all based on technical and fundamental data, and you see a very strong momentum. The most recent high on Coal India was somewhere in the vicinity of 359. The counter closed at 354 yesterday. You should see that being taken out in a fairly short time. The price at 350 levels is the highest since September 2015. So 5 + 3 8 साल का ब्रेकआउट आपको कोल इंडिया पे दिख रहा है. साक्षी.
Absolutely. Let's also look at how the global market setup looks like. Well, the US markets did end lower on Monday, interrupting last week's stunning rally as investors turned a little bit cautious ahead of the employment data due this week. That could also alter the expectations that the Federal Reserve will cut interest rates early next year. Wall Street saw some profit booking overnight. The Nasdaq shared about 0.8% in trade. The S&P 500 ended about 0.5% lower as well. The Dow also slightly lower at about 0.1% of a downtick that we saw. The S&P 500 receded with the mega caps like Microsoft, Apple, Nvidia and Amazon shares dipping over 1%, pressured by the higher US Treasury yields, which made returns on stocks less attractive. Asian markets again taking the cues from the overnight Wall Street. We saw that the Asian markets opened lower across the region, and that's amid a slew of economic data as well. And you actually saw Nikkei, Kospi, Hang Seng, Shanghai, all of them still trading down, with the Nikkei under pressure for the second day in a row as well. When we talk about the GIFT Nifty, that's indicating a flat to a negative start for the Indian equity markets as well. So the or flattish absolutely start at 20,805 right now. So the slight recovery has happened in the GIFT Nifty trends as well. So we'll continue to watch out for as to how do we watch the markets open. Right now it seems to be in the positive zone. But when we talk about the flows, clearly, foreign institutional investors bought shares worth about 2,073 odd crore rupees, continuing their buying spree into the Indian markets. The domestic institutional investors also purchased about 4,797 odd crore rupees of worth of stocks in yesterday's trading action as well. So the FIIs are clearly coming back in trade. Shell, it looks like it's going to be a party on D Street that continues, with the foreign investors finally looking at a buying action coming in the Indian markets now.
So Sakshi, if you recollect, when we had started this morning show somewhere in July and August, we've done a series of shows on which are the top fundamentally strong mutual funds to buy. Now, those are the guys who had religiously and relentlessly purchased blue chips on a monthly SIP basis. Remember, 8,000 crores out of 17,000 crore rupees, which are the monthly SIPs into mutual funds, come into equities. Now, these are the guys who will sell it to foreigners. So it's, a sense of deja vu that our foreign friends will come in and they will realize कि भाई हम तो बेच के गए थे जब निफ्टी 17,000 18,000 था, अब हमें वापस 21,000 पे खरीदना पड़ रहा है. But that is life. Foreigners have also made supernormal money on Wall Street. From the low of October 26th, Sakshi, the Dow Jones index, the index alone is up 12%.
Yeah.
So you can well imagine the kind of money foreigners would have met, because US 10-year yield has dipped. Now a part of this money will be coming to emerging markets, and within emerging markets the best place I would say is India. It's an island of safety. It's where earnings growth is showing rapid pace. It's where there is political stability, and more importantly, the Nifty is not overvalued at all despite the rally that you have seen so far. So money will come in, and it's already started, Sakshi.
Absolutely. Let's also look at a slew of other stocks that we'll have to keep on our watch list before we welcome our technical guest on the show. Bank of India, that stock is under watch today, and that could be because reports are suggesting that the lender is planning a QIP issue worth 3,500 crore rupees to 4,000 odd crore rupees, and the QIP could have a base issue worth 2,000 to 2,500 crores with an additional green shoe option of 1,500 crore rupees as well, and the issue price could be at a discount to SEBI's floor price as well. So that's as far as the reports are concerned. The stock was up 1.5% yesterday. Let's see if that uptick continues once the news flow also confirms as well. Honasa Consumer, Mama, that's going to be in focus. There are again reports that suggest that Fireside Investments is considering a stake sale of nearly 2% in Honasa. So that's going to be another thing to watch out for. JSW Infra, that's going to be under watch list. Again, the arm of the company JSW Dharmantar Port will acquire 50% plus one shares of PNP Maritime for 270 odd crore rupees again. That's going to be in watch list. DCB Bank could be in focus here. The promoter Aga Khan Fund for Economic Development has proposed to invest up to $10 million by subscribing to additional shares of the bank as well. So that's going to be another stock that's going to be in focus. Let's now welcome Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financial. He's with us. Very good morning to you, Akshay. Great to have you with us. Tell us, how are you placed on the Nifty and the Nifty Bank? What are the next levels that you're watching out on these after the stunning record run yesterday?
Good morning, Sakshi. The stunning record run should continue on the Nifty index, and primarily if you look at the parameters which has been a trigger for this such a strong momentum up move for the December series, it's the break of the all-time high levels of 20,250. So there's been no stopping the index, which has primarily been fueled by short covering, as I see, because if you look at the option segment, a lot of call writers have been caught on the wrong foot. Right from the 20,200 to 500 mark, there's been a lot of unwinding in calls, and a lot of put writing has shifted to higher strikes, especially at the levels of 20,500. So 20,500 base is setting up for the coming weekly expiry. I see the index maybe a couple of days ahead of the Fed meet. You might see some bit of temporary consolidation, but broadly as the index stands, 21,000 is mostly where we are heading for the December series. Levels to keep an eye on would be the key support levels of 20,450 to 20,500. Till these support levels hold, there is no risk of any reversal, and the targets of 21,000 stay intact. Moving on to the bank index, bank index has been a leader, all-time high touched in matter of just a couple of days post the index sustaining above the 45,000 mark. Maybe it might be slightly vulnerable to profit booking on a day trading front because the momentum has been too strong and too fast against the expectations. But clearly, as I understand from the options data placement, a lot of put writing is shifting on to higher strikes, especially at the 45,500 mark, which is now the base for the bank Nifty index. And sooner or later, maybe in the short term frame, you might see it sustaining above 4,600, and ultimately the target area which I foresee for December is roughly around 47,000. So positive view, continue to be a buyer for both Nifty and Bank Nifty for the December series. It's a Santa Claus rally, and this should continue in the days to come.
Wow, kya baat hai, Santa Claus rally. It's the Modi premium. And Sakshi, we've seen it coming much earlier. Remember, Nifty is up actually 880 points in the last 5 trading sessions. Let's pause for a bit and offer our sympathies to all the bears around. There's a terrible time ahead for them. As Akshay very rightly says, there is more in the offing. So, Akshay, individually, how are you now refocusing your technical and trading charts? Are there more steam? Is there more momentum in frontline Nifty counters? Or do you see mid caps and small caps ruling roost still? Any picks that you can share?
Good morning, Shailji. So my understanding is, if you look at the momentum in the Nifty, it's been more of a sector rotation, which I understand. And lately, if you look at the stock participation, stocks which had been under their shell for long are now coming out in the open. Especially if you look at Kotak Bank, which was especially an underperformer in the private banking space, has performed very strongly in yesterday's market. And I believe these are small pockets in the market which have not performed and would perform in the next leg of rally. So here I foresee the momentum continuing. It may be a sector rotation. We started with power, then with the PSU stocks, slowly moving on to auto and banking. And I believe it might be the telecom space which might do well, considering the fact that not much flows have been seen in this space. But broadly, from a trading front, there are a couple of stocks on my watch list which I would recommend for trading. First would be IndusInd Bank. Again, a slow mover till now, but the momentum has picked up. Strong volumes have picked up in the last couple of days in IndusInd Bank. The private banking space is seeing a lot of inflows, and I believe IndusInd Bank should be setting up for a strong upside. Possible support zone seen at 1460. I would buy IndusInd Bank at the current levels for a target of 1562. Extended target can be 1577 with a stop of 1477. And the second trade would be for the metals and mining space. Here, Vedanta, a head and shoulder in inverse head and shoulder, which is a bullish pattern, is in the making. The breakout is roughly about 250. We closed at 241 yesterday. So my understanding is that this is setting up for a breakout by Vedanta at current market price for a target of 256. Extended target can be 261 with a stop loss of 234.
Okay. Got that. Let's quickly take a break right now. Akshay, when we return, we will discuss more stock ideas with you before the markets hit pre-open. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Business Today television. This is Market Today. I'm Sakshi and with me is Shail Bhatnagar, and also with us is our special guest Akshay Bhagwat, Senior Vice President Derivatives Research at JM Financial. Akshay, you discussed IndusInd Bank and Vedanta as your top stock picks. We will keep an eye out on both of these. Could you also give us your view on Bank of India? The company is likely to be in focus today with the launch of its QIP this week as per some news reports in the range of 3,500 to 4,000 odd crore rupees. How does the technical chart really look like for this one?
For Bank of India, it's setting up for a possible breakout. If you look at the technical charts, there is some resistance being offered roughly at the levels of 109 to 110. So we are almost at the cusp of a possible breakout in Bank of India, considering the fact that the banking policy is due a couple of days and the banking stocks are in a strong momentum up rally. The probability is high that you might see the breakout very soon. If this breakout matures, you can see a target of 125 plus. So the view is positive, targeting 125 plus. The support is 105. So maintain a hold or a buy in Bank of India.
Okay. Got that. Right. Akshay, I'll take one.
Let's look at some other stocks that have been buzzing on the screen. Yeah, please continue, Sakshi.
So one more stock I wanted to discuss, and after that, Shail, you can discuss your stocks. The other one that I want to discuss is M&M Financial. Here, the November disbursement has been increased by 16% year on year, and there are a lot of brokerage houses reports that have come in for this one again, and with targets, higher targets for this one after the disbursements have been increased too. Say, for example, Jefferies has a 295 target, but Citi has a bullish target of 350 rupees on M&M Finance. How would you look at this stock?
M&M Finance, if I look at the charts, it's been slightly subdued in the last month, but it is setting up for a small trading bounce, as I understand. So if you're looking from a trading perspective, the stock is closed at 278 yesterday. There is some room for an upside level till around 290, 295. So that's the trading target I foresee. It's not a big move as of now because the momentum is lacking in the stock. Trading targets, I would work with small targets right now. 290 is the target I would look for with a support of 270.
Okay, we are discussing stocks where you might see a strong potential bounce given the froth and the enthusiasm that is there among bulls. For you, Akshay, a very strong trade that's coming in is in Bank of Baroda. If you look at how the stock moved in FNO, this was on a classic short covering move where it's gained strength. What are the charts of Bank of Baroda telling you?
Absolutely, Shailji, a very strong move setting up in Bank of Baroda. December series has noted a lot of long additions in the futures and option space, especially the strike of 215 strike close to 09, but 10 strike is not large accumulation 18 in Bank of Baroda. A positive chart setup backed by derivatives data. 200 is the support, and by our whole Bank of Baroda for a trading target 215 to 218 for the month of December.
Okay, and one important data point on Bank of Baroda I'd like to mention. Yesterday, about 3.59 crore shares were traded against the monthly average of just 1.66 crores. And of this 3.6 actually, 54% was converted to delivery. So the move that you've seen yesterday has come on higher price, higher volume, and of course, a very, very strong traction on all sorts of banks, whether they are PSUs, whether they are private sector banks. So this is a theme which is vibrating across the space, whether you look at the cash market or you look at the futures market. One good point about the futures market as far as Bank of Baroda is concerned, yesterday's gain was on short covering. So basically there was a 2.5% drop in open interest. Remember, that's because bears are on back foot. So this is something that you can look at on the charts. 210.40 in futures, 3.5% higher. Very strong delivery statistics and very strong price uptick. Pre-open trades, ladies and gentlemen, we have a 62 point gap up on the Nifty, 20,715 in front of you. Let's look at how the market heavyweights are doing. Remember, yesterday was a blowout, and it's the follow-up trade that is now coming on the market. Remember, nothing happened on IT yesterday, so it's the turn of IT stocks to rise. TCS 2.5% higher, almost 3,600. ITC 1% higher, 459. Let's look at the three index heavyweights and see what's happening on HDFC Bank. Remember, there was a higher delivery pattern, flat at 1609. Reliance 2420, again flat, nothing much happening there. What's happening on Infosys? 1465 flat. So if these the three index heavyweights are flat, remember the Nifty is most likely to consolidate on yesterday's very, very smart 2% rally. Let's look and drill down deeper. What's happening on ICICI Bank? Again flat, 922.20. I think we'll revisit the index heavyweights. The Nifty now absolutely flat, 12 points higher, 20,694. A very, very quick look at what's happening in the FNO space, which was dominated by the Adani stocks yesterday. FNO top gainer, TCS 2.5% higher, 35.50. TVS Motors 1928. It's a runaway rally on TVS, 1.26% higher. IOC 1.8% higher, 118. These are the top traded counters as of now. Apollo Hospitals, Apollo Tires 460, 2.2% higher. We have Federal Bank 1.6% higher at 156.50. Top losers here, RBL Bank down 2.6%, 236. Profit booking in Hindustan Petroleum, HPCL 370. This is down 1.6. Nothing to be worried about here. Let's again shift focus to NSE 500. Top gainers. Okay. Some names I should be discussing. Raymond 2.3% higher, 1615. Saregama 1.3% higher, 2.3% higher, 382. Nothing much of consequence. It's going to be a flat day today. Nifty 2930, 20,716. This is how the picture is settling for Monday. Let's see whether Mr. Dharmesh Kant has joined us or not. Yes, he is. Dharmesh ji is with us, Head of Equity Research at Cholamandalam Securities. Dharmesh ji, What a lovely day to welcome you, sir. The Modi premium shining bright and long on Dalal Street. How do you see the run up that we saw yesterday? What are your thoughts as far as this rally is concerned, and where are you putting money?
Yeah, good morning, Salji. So day is always lovely to meet you online here. So yeah, definitely the result of state elections was always welcome, and it see what is necessary is a clean mandate, and that is what was very relevant. This 3-1 sweep is a clean mandate to the incumbent government, and it is likely that 2024 elections would be in line. As far as equity markets are concerned, if you look at the equity risk premium, it is around 2.3, 2.34 as of now. Considering that 20% kind of an Nifty EPS growth is likely to be happen in FY24. So looking at half year FY24, the Nifty EPS around 498. So, and last year, the second half was almost 20% higher than the first half. If we put that into account, I was originally going with 1050 kind of an EPS, and that is likely to be the zone where Nifty FY24 EPS would be. So plenty of room still left. The market is just inching towards being thoda highly valued, but still near the mean levels. And I think 23,000 the Nifty level would be a level based on current earnings where it can be a stretched valuation. You can say plus one standard deviation kind of from the mean multiple 1 year forward earnings. So elbow room is there, scope is there, and this is coming at the top of interest rate cycle. So this expansion of equity risk premium will be led by earnings growth as well as lower interest rate. As far as putting in money is concerned, the only new sector which has come into place, apart from infra, railway, defense, power sector, automobile, is the private banking space. This sector was not doing well for last 1 year. I mean, all the top large cap stocks, be it Kotak Bank, HDFC Bank, ICICI Bank, in spite of stellar performances, somehow the stock price was not moving. The money was being allocated to other sectors. From a 1 year perspective, I think this is an area where one should be deploying fresh money. Axis and IndusInd has already moved, so the new stocks on the radar would be ICICI Bank, Kotak Bank, and HDFC Banks. As a basket buy, this should be bought into for a year's perspective. And I think around 15 to 20% stock price return is very likely on the card. And the inquiries which we are getting from HNIs is not for a month or a couple of weeks perspective. Now they are asking, tell us about 2 year, 3 year horizon. We want to buy and sit tight. That kind of environment is there as far as investors are concerned.
Okay, and in the pre-opening action, the market's even taking higher strides now, 105 points higher, 20,786 now on your screens already. We are inching closer to 20,800 now, and that figure also could be, yeah, it's on your screens now, 20,800 on your screens, 115 points higher. So there is clearly no stopping this, Modi-led premium rally, what Shail is talking about. What about Mr. Kant, anybody who may be wanting to now look at markets afresh at these record high levels, would you ask them to rejig their portfolios? Fresh investor, how would you advise them to now participate in this kind of a market? It's a crime to stay away from the markets at this point, right?
One has to stay invested in this market. And a staggered manner, staggered buying approach should be deployed from here, say, for next 2 or 3 months. When the Q3 earnings starts rolling by, till that time, from say December, January, and Feb, 30% kind of a location is advisable. If you get a correction in between, it's most welcome. The sectors are same. It's a defense sector, railway infra sector, power sector, automobiles, particularly two-wheeler segment, and pre-election, this sector normally does well. And the new incumbent into this space is a private sector banking space. So the top picks, just to name a few, is ICICI Bank, Kotak Bank, HDFC Bank from the private sector banking space. From the railway infra space, RBNL, Aircon still looks pretty attractive on the valuation count as well. From the defense, I have been consistently recommending HAL. The stock has moved quite largely. I mean, pre-Diwali, it was around 1800, 1850 odd levels. It has moved up to 2500 now. But still, there is a plenty of stock left out there, and it's the cheapest in the defense space. So trading at 25 times 1 year forward PE multiple, where book to bill ratio is now 3x, and it's expanding with all Make in India and PLI schemes rolling in. So this stock looks pretty attractive. And on the two-wheeler side, I think Bajaj Auto and Hero MotoCorp still has plenty of steam left as a run-up to the general election 2024. So these are the likely areas where one should be investing. My only sincere request is do it in a staggered manner rather than going at a one go.
Okay, fair enough. 122 points higher in trade for the Nifty now, 20,808 as the pre-opening levels are settling in. What are we looking at on the top gainers front as far as the Nifty is concerned? It's banks all the way. HDFC Bank 1.6% higher in trade. ICICI Bank 1.14% higher. Axis Bank up by 1% higher as well. So out of the top 5 gainers, I think 3 of them are banks for sure. BPCL, HUL, Tata Consultancy Services and HCL Tech also among the top gainers in the pre-opening trade. The Nifty Private Bank is the top sectoral moving index today. The Nifty Bank is settling 1% higher, 46,895 currently. We also have the financial services now moving higher by 1%. Oil and gas, realty space. In fact, among the top all the 19 sectoral indices are up into the green. Shail, what are you watching?
Sakshi, I'm watching in awe, and I'll tell you why. Add 122 to 880, which is already in the last 5 days that you see. So in 6 days, the market has, especially on the Nifty, gone up by 1,000 points, and it's relentless. Let's look at how the pre-open trade has settled. I want to see what HDFC Bank is doing. 1.7% higher, 1636. ICICI Bank 1.4% higher, 1002. ICICI Bank, ladies and gentlemen, is now back in 4 digits, and 1002 basically means the all-time high is 1008. So this is Sakshi now coming. And again, remember, yesterday I had pointed out the Nifty has settled above R4, the 4th resistance intraday. Today we are starting much above R1, which is 20,750, which basically means if you are booking profit, then wait for 20,750 to materialize and then take a long call from then on, if at all. Again, these are all technical advices. Please also consult your own financial advisor at this point of time. Banks. It will be at the day of the banks again, Sakshi. So Bank Nifty will again come into focus. Axis Bank is up 1%, 1136, fresh record high. HDFC and ICICI Bank are up about more than 1% each. Kotak Bank 0.5%, SBI flat. And how about our good friend IndusInd Bank, which our friend Akshat is talking about, is doing phenomenally well. Okay, IndusInd Bank is up 0.34%, 1590. So again a blowout day. Let's touch base with on the technical part again, and Akshay is with us. Akshay, would you want to comment on Bank Nifty? We are starting at 46,900, up 1%. What would you do? Yesterday 600 points, today's 464.
See, the Bank Nifty is on a stupendous rally and the rally should continue. But if you're looking at a day trading approach, there is a good chance that we might consolidate for the day. So I would take a stock specific action, especially I would be looking at the private banking space for long ideas and not touch base with Bank Nifty, at least for day trading. Bank Nifty, yes, it has building up a strong base. If you look at the weekly expiry, which is slated for tomorrow, 46,000 is possibly the base which is setting up now. And broadly, the charts also signal further upsides or momentum ahead. Private banking space has seen a lot of long additions, and here a couple of names which I mentioned. IndusInd Bank was my recommendation. DCB Bank can be another stock which you can look into, and obviously I believe there is some news flow also positively on this stock today. So that would be the other banking name which I would recommend for trading, DCB Bank, which is at a support and possibly a long candidate at the given juncture.
Okay. All right. Let me talk to you, Mr. Kant, about the banking majors. You were talking about how they are going to be now taking the lead. HDFC Bank, ICICI Bank, Axis Bank, all of them, up by over 1% in the pre-opening trade today. Where would your how will your pecking order be as far as these top-line banks are concerned?
So the pecking order, ICICI Bank would be the topic out there because last 1 year, what we have seen hardly any movement in the stock price. Though all the 4 quarters they posted a very good set of numbers. So all the boxes were ticked very well by them. Be it AUM growth of average AUM growth has been around 17-18%, and I'm talking about Q1, Q2, Q3, and Q4. At the same time, the asset quality has improved. They have been able to maintain their NIMs and ROA at the higher end of the multiple. So this should be the topic out there, and it's primarily if you look at the number credit card numbers, it was 1.7 like a trillion kind of credit card spends is happening, and they are one of the front runners in that space. Though RBI has increased the unsecured risk premium, but these banks are well capitalized to tackle that. I don't think there will be any dent in the growth trajectory of these banks. So ICICI is the top pick, followed by Kotak and then HDFC Bank. So HDFC, I think management has been a bit not that aggressive as compared to the ICICI Bank. So the picking order would change accordingly. But all these three banks are very good. I think next 2 years, around 20-22% kind of an AUM growth, so with better asset qualities all there on the cards.
Right. Mr. Kant, let's also look at the IT pack that's also seeing the big heavyweights like TCS and HCL Tech now starting to participate a bit. Do you think this is the time to start nibbling into the large cap IT names as well?
Yeah, definitely, because if you look at most of the IT stocks, they derive their revenue primarily from the US market, and that seems to be quite settled because if the Q3 calendar year 23 GDP was 5.2% in US, and this is consistently getting better and better on top of high interest rates out there. So interest rate is likely to be peaked out in the US market, and it's likely to come down. Even if it is stable, the non-discretionary spend, which was seeing a cut, is likely to be back again. So Q3, when these companies report their numbers,
right, Mr. Kant, we'll just focus on the market, please.
Yeah, sure.
Yeah, the Nifty is open 40 points higher, 20,724. It's ICICI Bank that's leading the charge on the index, 1% higher, 1,002. Remember, the all-time high for ICICI Bank is 1,008. Given the momentum in price and delivery, this should be easily matchable. HDFC Bank 0.7% higher, 1621. Axis 0.8% higher, 1134. The Bank Nifty is 263 points higher, fresh record high to say 46,660. What else is buzzing? We have strong gains on Reliance, 0.3% higher, 2428. We have Lever, 0.6% higher, 2619. Let's focus on F&O and look at those stocks which are beyond the index heavyweights. The top gainer being IEX, 147 rupees, up 1.4%. Remember, the average traded volume of electricity futures on IEX has jumped substantially in the month of November. HPCL, BPCL and IOC are the top three traded counters and top three gainers, 2.3% higher, 1.7% higher and 1.7% higher respectively on HP, BP and IOC. So the market is concentrating on PSU stocks. Let's look at the NSE 500, and the top gainer is Swan Energy, 447 points higher, 7%. We have CESE, 113 rupees, 3.6% higher. CAMS, there's a transaction on this one, 2974, 2.9% higher. And of course, you have the likes of Bank of India, Glaxo and Federal Bank amongst gainers as far as the NSE 500 list is concerned. All-time high, CESE, Radico Khaitan, M&M, Axis Bank and CSB Bank. This is the first trades in the first 2 or 3 minutes. Let's get Akshay into the conversation. Akshay, 56 point higher on the Nifty. Anything you'd like to do and anything that catches your fancy?
Well, I think it's being likely to be a more of a consolidative day. As today's trading action, you have bank policy and also the Fed meet. So I think it is slightly vulnerable to minor profit booking. No major change in the trend. It's going up. It will give you an opportunity to re-enter on dips. Well, I'll be looking at the IT names if you are day trading today because slightly the money flow looks to be in the IT space. So Emphasis and TCS are the couple of names which comes to my mind here. So they can be seen from a buying perspective for day trading or a carry forward. But overall, if I were to sum up for the day, it's going to be more of a consolidative day. That's the sense I derive looking at the data and the opening in the indices.
Okay, right. Akshay, why don't you look at some of these oil and gas names like BPCL, HPCL? There are again top gainers in the FNO space again. How would you be looking at them? Most of them are up by 2.5, 2.7%. IOC is also now picking up pace here. So the entire energy basket is up. IEX, already Shell pointed out right there, and the entire oil and gas basket. And which is your top stock from here?
From the oil and gas space, BPCL is possibly gunning for a target of 500. So that's the target area you can look for. If you're holding the stock, 500 is your target. Fresh entry, I would not advise in
Okay.
BPCL. IEX is another stock which can be on your watch list because this had been subdued, a strong opening today, backed by news. This can be the stock you can choose to take a fresh entry on the buy side. 142 support base is in place, technically very sound for a trading up move till 157. So you can buy IEX. That's the preferred pick I have here in the energy space, and 157 should be the trading target from the current market price.
All right, let's look at a lot of banks that are moving up higher in trade. Private banks are the ones that are moving up the most in trade. Apart from the heavyweights, let's also look at City Union Bank, that's up by 0.7% odd. Canara Bank, that's up in trade, and we've discussed this stock pretty widely over the last few trading sessions again. We're also looking at an IDFC Bank, IndusInd Bank as well. Let's also look at the PSU banks and how are they picking up, because the PSU banking index is also up by 0.6% odd after that 3%, 3.5% move that we saw yesterday on the index. So you have Bank of India that's now up over a percent, State Bank of India that's up by 0.9%, Bank of Baroda we've discussed 0.8% high in trade, Indian Bank that's up by 0.7% odd. How would you be looking at a slew of these names, Akshay? Anything that catches your eye?
I'll be particularly interested in DCB Bank here because it's opened very strong, and I believe there is a positive news flow about fund being infused. So even if I look from the technical charts, a very strong price base is intact at 110, 112. A very strong risk reward payoff if you buy it at current levels because your support is 110, your risk is just 5 to 7 rupees from the current level, and if you aim, your targets can be as great as 130 plus. So excellent placement on the technical chart, news based, and I would recommend buying DCB Bank. Keep targets of 130 plus, time horizon 1 to 1.5 month, support is 110.
Sure, absolutely. And DCB Bank also in the stocks to watch list today. Promoter AK Fed has proposed to invest $10 million by subscribing additional shares of the bank, which we already mentioned in the pre-opening space as well. So that's one stock that you can focus on. Akshay, your next targets for Canara Bank, what would your view be here?
Canara Bank has had its fair share of up move till now, although it is still stronger in the charts. But from a fresh buy perspective, it is slightly overstretched. So I would slightly wait for a dip if I were to take a fresh trade on this. 407, 410 ideally is the level I would look forward to if I were to take a fresh trade. Broadly, the chart structure are very strong. 445 to 450 is the target I foresee. But for that, those targets, you need to give some time to this trade. 15 to 20 trading sessions is the minimum time you have to give. Leaving aside the time factor, it's a very strong chart. I would recommend to hold this and still further up move expected in Canara Bank in the days to come.
Let's pay attention to the Nifty again, Sakshi. At the moment, it's up just 36, and as Akshay was pointing out, we are going to have possibly a sideways day. The second resistance has been broken, which was 20,750. At the moment at 20,726, the Nifty might be up 40 points, but remember, it's the day's high was something like 20,820. So a 100-point downtick that has come, and this is profit booking either in the options environment, or of course people who were sensible enough to take deliveries are now booking out. What else is happening? Sakshi, when you look at the index heavyweights, there is a lot of traction. There's something new that I've loaded on my software, and it's giving me a lot of data on how Adani Ports is moving. Now 897, and how strong traction is coming into M&M Finance. Remember, you had marked this stock. Let's look at M&M Financial Services. At the moment, it's at 275. This is the one that is moving fairly okay, around 200 DMA. And Sakshi, it's the Adani Group which is now on the gains. Very strong block deals happening on Adani Enterprises. We have 1.39 crore transaction immediately. Adani Enterprises at the moment is 4% higher, and we have Adani Ports 3% higher, 90570. Let's look at the other businesses. Adani Wilmar 2.7% higher, 353, and of course Ambuja and ACC both up about 1.5% on the Adani stable. Let's look at stocks that have hit highs, and then what we'll do is we'll drill deeper into how the business is moving. Okay, all-time highs are Radico 1780. This is up 8%. That's fairly substantial. Federal Bank, because the theme is banking at the moment. Akshay, your view on Federal Bank, 157, up 2.2%.
Federal Bank has a very strong chart structure, and in the banking stock which can be on your buy watch list, especially if you have not bought this one. I would recommend go for buying. The chart structure is very strong, a higher top and a higher low, a perfect strong uptrend in place in Federal Bank. It is possibly looking at targets of roughly around 190 plus from a medium term perspective. So I am positive on Federal Bank. You can consider even buying it at the current rate. The support base I foresee is around 153. The trading targets can be 175 to 180. Broadly, 190 plus is the target I foresee with a 1.5 to 2 month horizon. So buy Federal Bank or hold. It's a positive view I maintain.
Okay.
Right. Let's get Dharmesh ji into the conversation on Federal Bank. Sir, your view fundamentally on how this lender can perform in the coming years or so, given its earning strength?
It is more of a conservative bank. I mean, the management has been more of a consistent, sticky player rather than an aggressive player out there. But at this juncture, what we are seeing is more on the large cap side. So in the banking space and in the NBFC space, we are preferring large caps. So because they have the muscle power to capture on the upcoming growth opportunity, and I'm very sure going by the policy framework of RBI, it will get more stringent and difficult for smaller players to carry on with the leverage opportunities out there in the market. So unsecured portion is where most of these smaller players were gaining the traction, and that is under the radar, that is under the scrutiny, so weightages will increase. So to counter that, you need to be in the large cap space. So we are avoiding all the small cap financial plays, only sticking to the large cap ones. So we'll give a skip to Federal Bank.
Okay. Mr. Kant, let me just shift gears and take your focus to the auto names. A lot of them are also moving up in trade. M&M, for example, is up by a percent. It's at 1675. Tata Motors is up 0.8%. We are also looking at say a Hero MotoCorp that's now moving up 0.4% higher in trade. These are all among the top 10 gainers of the Nifty today. Your own sense of how would you be placed as far as these auto names are concerned? Which way would you tilt your focus, two-wheelers or four-wheelers, and how would your top stocks look like?
Yes, actually, I think auto we have to dissect it between two-wheelers, three-wheelers, LCV, MSCV, and the passenger vehicle segment. And there, I think two-wheeler is a segment where the traction will still be there as far as sales are concerned, because usually before the election, these sales pick up, and then there is a marriage season ahead in the month of January and February, and some festivities are also there, New Year festivals are there. So these are the periods when things starts picking up for the two-wheeler segment. At the same time, my own sense is that there will be some rate cuts going into Jan and Feb. So that will also benefit this segment. Commodity prices are everything is playing into their favor. Stock prices have moved up quite significantly. It's now definitely on the higher end of the valuation multiple is expensive. So margin of error is hardly any left out there. One has to be cautious of this fact. But still, Hero MotoCorp and Bajaj Auto, along with say TVS Motor, can be accumulated from a long-term perspective. MSCV, I don't think there would be any traction for the next 6 months. That segment would be a laggard. LCV can find some traction out there. At the same time, four-wheeler segment, that is a passenger vehicle segment, won't be finding much of a traction. So Maruti, Tata Motors and Ashok Leyland can see a sideways kind of a movement for the next 5 to 6 months. Not much of a stock price traction out there. M&M stands a chance because it's a diversified play, and their SUV launches which has been there are finding good traction. Still, there is a 6 to 8 months kind of a waiting period, so that can also be acclimated. So that's the only play from the four-wheeler space which is being liked. Otherwise, two-wheeler, Hero, Bajaj, and TVS are the topics out there.
Anything from the auto ancillary space, sir, that you like at this current stage?
Yeah, auto ancillary, there are a couple of good names out there. And recently, I think yesterday, Classic Trucks order came, and that was quite encouraging. So, Bharat Forge is one play one should be looking into. It's both, I mean, automobile play, domestic as well as international. At the same time, it's a defense play. Valuation wise, it is expensive, but that's always been the case with the Bharat Forge. As far as order books are fine, the stock price continues to be move higher. And I think a 1 year target, if one is holding 1400, is the likely target. That's on a stretch valuation multiple, but that is how it behaves. Other than this, Minda Corp, Uno Minda looks pretty attractive to me with JBM Auto. So these are the four plays from the auto ancillary space, which has exposure to EV auto component as well, is looking pretty attractive. Valuations definitely is getting stretched, but that's likely to be the scenario going forward.
Okay, let's look at where the trader action is, and it's squarely and in our face on BHEL. 4% higher, 182.50. Akshay, your very quick view on this one. Of course, this is a sharp rally that's manifested itself already over the last 6 sessions. But what are the BHEL charts telling you? Strong volume here.
Yeah, Shailji, it's been a very sharp rally, but now I believe it may be vulnerable to profit booking very soon, because if you look at the resistance areas, 195 to 200, these areas are strong resistance zone, and you might see some profit booking, some healthy profit booking near the levels of 200. So I would feel, I expect that this is the last run up in BHEL as it currently stands. Still maybe 10 odd rupees more to go, but once it nears 200, that's when you have to be alert and take your profits off the table. That's the view I hold for trading in BHEL.
Okay, and this is a fairly smart advice coming in, because see, these are all overstretched charts. BHEL was 122 rupees on 9th of November, and in less than a month, forget a number of trading sessions, in less than a month, it's moved from 122 to 180. Lots of overstretched charts. SBI, now it's the big boy that's moving up, and this is what we had discussed, that money will come into blue chips. 606. Akshay, very quickly on your view on this one. Highest since 18th of September, and now above 600. What are the charts telling you?
Well, SBI has slightly been late to the party, but it's caught up pretty fast in the last couple of days. Especially the move is very stunning. It's caught the shorts in the derivative segment by surprise. A lot of call unwinding is what I see, and a small resistance at 605, but this should be taken off soon. A stock to have in your portfolio or to buy from a trading perspective. On the upside, 625 to 630 is where I would target for the December series. So buy SBI. Maybe it might hold for day trading at 600, 605, but broadly it is heading for 625 plus. So continue to hold buy. Support is around 590. Targets are 625.
Okay. Akshay, before we let you go, I'll just quickly take your one view on Swan Energy. The stock is up 7%. There's a block deal that has happened here. 2.3% stake sale has happened. About 66.6 lakh shares have exchanged hands. And this block deal is worth 276 odd crore rupees. Could you look at the charts and tell us if you find anything that you may want to share with the viewers?
Yeah, if you look at the charts of Swan Energy today, the momentum has picked up, especially after a lackluster phase of, I believe, 8 to 10 trading sessions. So that's a very positive development on the charts. One is because of the block deal. Second, because the momentum and the volumes are getting back in the stock. The broader chart structure is still strong. So probably it was a temporary break of a couple of weeks which the stock has taken and the momentum has resumed. So I would recommend to buy this or hold. The support is 425 and 475 to 490 is the possible targets I foresee in Swan Energy. Give it a time of maybe 10 to 15 trading sessions and you will see these targets being achieved.
Fair enough. Well, thank you so much, Akshay, for being with us and sharing all these stock ideas. Let me continue this conversation with Mr. Kant. If you have a view on Swan Energy, please do share with us, sir.
There's actually no view on Swan Energy. We don't track this.
Okay. Okay. How are you looking at the entire FMCG pack, sir? Today, most of these stocks in the Nifty pack are moving higher. Nestle, Britannia, Tata Consumer, HUL, they're all moving up in trade. Do you think there is anything that you believe that now this space can start providing as a good entry point?
Yeah, definitely. I mean, most of the stocks like HUL and all have corrected quite a bit, and they were not moving. They were consolidating at the lower end of the valuation multiple. And the next 2 quarters are likely to be better for them. One is before elections, we do see some traction coming into all FMCG counters. And last quarter, Nestle earning was pretty robust and good. I think as a basket play, one should be accumulating both HUL, Britannia, and Nestle. ITC is a different game. I mean, it's still 80% of the revenue. I mean, profit as far as operating profits are concerned is to the cigarette business. And the good part has been government has not tinkered with the cigarette excise rate. So, but that is again a better play. Again, ITC has consolidated for quite a long time. No stock price traction out there. So these are good defensive plays with a high margin of safety one can look forward to. However, I mean, the stock price returns won't be that great. The best you can get is 5 to 7% for say next 5 to 6 month time frame, and thereafter you have to relook at it depending upon how the other climatic conditions in India, monsoon and all, is likely to play out. So headroom for further growth is maybe 5 to 7%. At the same time, downside risk is 2 to 3%. So risk reward ratio is in favorable. One, if risk averse investors can definitely get this as a basket buy.
Okay, let's pay attention to the Nifty now, Sakshi. Up 70 points, 70,757. Remember, the first resistance is 20,757. So the battle is ongoing. Over the last 20 minutes, each 5-minute candle is in the green. This essentially means that the low has been tested, and that low was 20,720. From there, the index is now moving on its journey up. I'd like to see the 20,000 December 7th call, 20,700 December 7th call, at the moment trading at somewhere like 128 rupees. Remember, this is the weekly chart that we are taking about, and I'm just marking it for everybody's attention at about 128 rupees. The high for this one has been 147, and that was stuck immediately when markets opened at 9:15. Let's see how this one functions. I'm talking about 20,700 call at the moment for December 7th expiry at about 128 rupees PCR. Let's see whether we can show this. Yes, this is the one. It's appreciated over yesterday's close, but remember it's substantially below its intraday highs. So if the Nifty were to continue this momentum, then probably this is the call that one must look at. Okay, Ambuja Cement is blasting, and this is because it's the entire Adani space that's doing phenomenally well. And I think Akshay has probably bid us goodbye. But if he's there, Akshay, a very quick view on Ambuja Cement, now approaching 500 rupees. Okay, कोई बात नहीं. That's what is there on the screen. Very sharp move, and 5 individual block deals of 69 lakhs on Ambuja Cement, 1.65 crores, 75 lakhs, 1.1 crore, and of course 53 crores. Remember, these were underperformers not only within the Adani group but also across the cement pack. So Ambuja is something that one needs to look at, and the price that you see, 498, is the highest since 2023 of January. So it's a 9-month high that we've seen. At the moment, the Nifty has crossed its first resistance. We have a price of 20,765, and the call that we've discussed so far, which is the 20,700 December 7th call, is somewhere at 129, 130. Sakshi, to you.
All right, Mr. Kant, since Shail was also talking about the buzz in the cement space, I wanted to take your view. The entire pack seems to be up in trade. Dalmia Bharat, Ultratech Cement, Ambuja, ACC, JK Cement, they're all up in trade. How are you looking at this entire pack? And is this a fresh entry point that at least comes into few of the stocks from here?
Actually, I would avoid to take a fresh entry point. However, if one is holding on, the advice would be to stay invested. What happened was just before the elections, there was some kind of a scare being that maybe if the government changes, there would be investment will come less, and this volume growth which was cement space was witnessing may come under some kind of a slowdown. So now with this election results in place, the continuity of strength in the investment is likely to be there, and it can even be accelerated because the type of tax collection which the government is witnessing is humongous. It's been unseen of kind of our tax collection growth which India is witnessing as of now. So that will likely translate into the investments going forward as well. So, but price-wise, as far as price uptick is concerned, I don't think blended realizations are going to go up. Input prices are benign, so that advantage is already there. Operating margins may improve slightly based on the better capacity utilization. So the pecking order was always from the large cap. Ultratech has already moved quite a bit. ACC and Ambuja Cement both were because of the promoter overhang, had corrected quite a bit and it was not moving. So a catch-up rally is on there. I think still 15-20% can be made out there on the stock price of both ACC and Ambuja since this overhang is now through. So that's a tactical play. Mid and small cap cement counters are still a tactical play because they're available at around anywhere between $70 to $90 per ton EV per ton kind of a valuation multiples, which is cheaper, and they don't have a scale to multiply into a larger company. So eventually they would be taken over by the larger counterparts. So that's a technical play out there. Other than that, for business as usual, this is not a right entry point. Talking about Dalmia Bharat or Ultratech kind of a cement stock.
Fair enough. Well, on this note, thank you so much, Mr. Kant, for being with us on the show and
Thank you so
discussing
much.
all these stock ideas. Always a pleasure having you with us on Business Today television. Let me quickly mark for all our viewers the Adani Group stocks now. They're all buzzing in trade. Adani Ports especially at record high levels, up 5% in trade. Right now trading at 922 odd levels. Adani Enterprises also now 5.2% higher at 2663. And in fact, when we look at the FNO space, you will find that among all the top 5, top 6 stocks that are moving in trade in the FNO action, 4 of them are from the Adani Group. So Adani Enterprises up 5.4%, Adani Ports up 5.2%. We also have Ambuja Cements that's up 5% now, and ACC that's up by 3 odd percent. And these are all buzzing in trade. Even from the Nifty 500 basket, you also have Adani Green that's up in trade, and Adani Power also that's moving higher in trade. So the entire space is in action right now. What we'll do is we'll quickly take a break right now, but when we return, we will have our corporate traders section that follows and the top management of JB Pharma to discuss the business outlook going forward. So stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Business Today television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. And now to focus on our corporate trader section, the company on our focus is JB Pharma and the company's top management, Nikhil Chopra, the CEO and whole-time director, is now with us. Welcome to Business Today television, sir. It's good to have you here. A little bit about your company to all our viewers. JB Pharma was formerly known as JB Chemicals and Pharma and has been into the formulations business in the pharma sector. It has a lot of verticals, CDMO, cardiology that it works in, and a lot of business that comes from its lozenges business as well. In case you face cough and cold, the first thing that you go ahead and buy is a lozenges tablet, and most of them come from JB Pharma's stable. So sir, first up, tell us about a little bit about the quarter gone by. In the July to September quarter, we saw that the company reported a revenue growth about 9% year on year to 881 odd crore rupees. You had a margin of 27.6% compared to 22.8% earlier, and profits that increased 33% to 147 odd crore rupees. How would you be really looking at the business outlook in the second half of the fiscal year? And if you could give us any guidance as far as your top line and your bottom line is concerned, and even the margins, sir.
First of all, good morning to all of you, and thank you, Sakshi, for inviting me on the show. Overall, first 6 months of the year has been fair if I have to talk about the way we have traveled the journey at JB Pharma. You could see single-digit growth because we have taken a haircut of around 120 crores for our South Africa business. Otherwise, and that business is more happening in the world of a tender market where the margins are thin. So we have let go this business, and that annual impact will be 120 crores. So quarterly, you see impact of around 30 crores. Otherwise, if you see India business is going at a handsome pace of around 12 to 14%. CDMO business, as you spoke about, I think lozenges, we are doing fairly well. The run rate has been 100 crore plus for last 2 quarters. quarter three, you will see some softness happening in the CDMO business, but quarter four will bounce back. And overall, if you look at from a margin perspective, our guidance was 25 to 27%. I'm talking of operating EBITDA margins. We delivered 28% of EBITDA margins for the quarter. Going ahead for next 6 months, you should see us growing at double digit. Overall, the guidance that we've been giving to market is we intend to grow at around 12 to 14% top line as a company. And in particular, and this is for overall for the company and for India, as India pharma market that we expect to grow between 8 to 12%, we should be growing 2 to 300 basis better than the market. Secondly, on the margins, we should be close to 26, 27% as we have guided. And our profits would be in line with what we have been reporting our EBITDA margins. There are two big pillars of our business, India and CDMO, which today are contributing 65% of the revenue, which are high margin business where we have leadership. And going ahead, mid to long term, if I have to talk 2 to 3 years from here, we want this 65% contribution to go to 80%. Within the 65%, 53% contribution is coming from India and 12% is coming from CDMO.
Okay. Right. Mr. Chopra, welcome to Business Today Television, and it's a pleasure to host the management of a company that has been a multi-bagger over the last decade or so. At the moment, the stock is priced somewhere in the vicinity of 1450 rupees per share, and this has appreciated 38% each year over the last 10 years. Market capitalization somewhere like 22,000 crores. Mr. Chopra, let's talk about raw material pricing. How has this moved over the last 6 months or so? Obviously, we've seen a lot of dumping that's happened from the Chinese geography within the pharma and the chemicals space. How are you seeing your raw material prices move over the next 2 quarters? Is there some hope that shareholders can hold that these prices will result actually in higher margins?
If you look at last 6 months, 6 to 8 months, the raw material RMPM cost have peaked, but they are not coming down. That is what I can say. The good news is the freights, which had gone to 8 to 10% of the overall cost of the revenue, has come down to 4 to 5%. So that is the good news. Going ahead, I think overall, I think the way we procure the material, which is a combination of what is happening in India, what is happening in China, RMPM cost should stabilize from here. That is what I can comment. But still, in the business, there is uncertainty. But coming to your point in terms of margins, there are 3-4 things that we are trying to do in the business. Not only one pillar is RMPM, but equally we continue to run a efficiency program in the company across our 5,000 employees, be it medical reps on the field in terms of productivity per month, be it our manufacturing folks in terms of how we can increase the batch size and improve efficiency, be better vendor management. So there's an efficiency program, and we take some goals in terms of what savings have to come for the year. And that program has been running for last 3 years successfully. Equally, what we are trying to do is to improve our business mix. If you look at today, within India, if India is contributing 53% of the revenue, chronic part of the business is now close to around 52%, which was 45% 3 years ago. So chronic part of the business also is overall giving us better EBITDA margins. And I'm not talking only from the business perspective, but I think it is an onus on us as a healthcare company, because we consider ourselves as a custodian for healthcare for Indian population in terms of what more we can do to improve their quality of life. So lots of initiatives have been taken in terms of getting right medications for hypertension, heart failure, statin pills. That is what we have done. And we are a dominant player in the world of cardiology, which is a 25,000 crore market. And we are the eighth player, and we are the fastest growing company in cardiology in the country. So overall business mix in terms of what we are trying to do in the world of chronic. Secondly, what was spoken earlier by Sakshi is what we are trying to do in the world of CDMO. We are the 5th largest manufacturer of lozenges globally, and all this business happens outside India. And we work with some global marquee players in the world of CDMO, particularly for cough and cold lozenges. And the capacity that we have to manufacture lozenges is close to 2 billion units of lozenges annually. Last year, we could manufacture 1 billion units of lozenges. So chronic, CDMO, overall business mix improvement, and equally the efficiency program that we are running, freight cost coming down, RMPM cost stabilizing, that will help us in terms of gross margin close to 65 to 66% for the company.
Fair enough. Sir, I also wanted to ask you, Mr. Chopra, on basically your recent acquisition, Rizal, the drug to reduce cholesterol and the
Yes.
risk of heart attack from Glenmark in December of 2022. How has that really performed for you over the last 1 year? Where do you see it going forward from here? And what kind of revenue contribution do you see coming in going forward?
So Sakshi, when we acquired this business was close to around 60 crores in a 2,000 crore market, and we were 9/10th player. The overall 60 crore revenue, what we acquired from Glenmark, was not growing for last 2-3 years. First 2-3 years, I think when we have completed 1 year and we are growing in line with market, we are growing at around 12 to 14%. That is a market growth of Rosuvastatin as a franchisee, and we intend to grow better than the market. So that is where we stand, and it's a good addition to our entire chronic part of the business, which will only help us to serve more and more number of patients suffering from cardiovascular diseases in the country. So this is what we have done. But equally, I would like to also spend time in terms of what we are trying to do in the world of hypertension, where we have grown our organic brands, which is Cilacar and Nicardia, which is for hypertension management, which also are helping overall patients who are suffering from hypertension to live better quality of life, because the burden of disease of hypertension in the country is close to 100 million patients, and 1 in 4 patient is undiagnosed. So JB as a company, not only we want to make revenues, but we want to look at how do we collectively look at working and see more collective working with the society, with the cardiology society of the country, with the scientific bodies of the country in terms of reducing the burden of disease and also looking at how do we at least help in dissemination of knowledge to the healthcare professionals. So we have taken different goals in terms of what we want to do in terms of chronic part of the business in the country.
Right. Sir, also Sporlac, that's the probiotics business that was again acquired in January of 2022, another of your key brands here. How would you see this really growing in for you as far as the probiotics space is concerned, sir?
So the good news is today we have 6 brands in top 300, and the latest addition was Asmada, the heart failure pill. And I think 6 to 8 months from here, you should see Sporolac also in top 300 from JB Pharma. When we acquired in January 2021, the revenue was close to 60 crores. January 2022, sorry, and the revenue was close to 60 crores. We have climbed the revenue close to around 90 crores. Overall, better life cycle management, better versions of Sporolac, pediatric version of Sporolac GG, women health version of Sporolac Eva, and better distribution practices, better in-clinic practices. That is what we have followed. The brand probably by end of the financial year should be close to 100 crores. So I think the entire concept, what JB has overall mastered of making big brands bigger, whether it is organic or what we have acquired, whether it is Cilacar, Nicardia, Rentec, Metrogyl, which are our organic brands, or what we have acquired, Asmada, Sporolac, Rizal, that will continue to help us in terms of growing India market for JB better than the overall Indian pharma market.
Okay. Mr. Chopra, let's look at future expansion. What are the capacities that you've planned which are most likely to hit your top line over the next 6 months or so? And what is the plan for further enhancement of capacity at the moment?
So as I spoke, I think in the world of CDMO, we can manufacture close to 2 billion lozenges, and we are manufacturing we last year manufactured 1 billion. So we are 50% of the capacity, so that's not an issue. In terms of the other business that we do in India, emerging markets, Russia, South Africa, there I think we are at 70% of the capacity. So from a capex perspective, which is close to 90 to 100 crores, right now, not 6 months, but next couple of years, we don't have any issue in terms of where we stand, but we are investing a lot more in some platform technologies, whether it is MUPS technology, hot melt tablet technology, we are doing that. And also we are investing in new innovative packagings for CDMO business. That is the investment that we are doing, which will overall help us, our partners in CDMO, to be more competitive and ahead than the competition in those space, because that space of CDMO, whether it is lozenges, cough syrups, is highly competitive. So that is where we stand in terms of capex. I think we are rightly placed in terms of where we are from our CDMO business as well as our other formulations.
Mr. Chopra, when you look at your debt profile, I am actually looking at your interest payments from the income statement. Trailing 12-month interest payments have been in the vicinity of 44 crore rupees. You have about 536 crore worth of debt. The only point I'm trying to raise is that till about 3-4 years ago, there was zero debt on the balance sheet. But at the moment, 536. Are there chances that you'll prepay this, or is this something in sync with your debt equity ratio? What about the debt structure?
If you look at our Q2 results, I think you have not read the right line in terms of debt. By December end, and the commentary that we gave in our conference call, by this quarter end will be cash positive. So that is where we stand. If because we have some investments in the liquidity fund. So by end of December, which I spoke in our conference call, by end of this quarter, we should be cash positive.
Okay. Well, on that note, thank you so much, Mr. Chopra, for speaking to us on Business Today TV, and all the best for the future quarterly results, and hope to speak again when the next quarterly results are around for you. Let's get back to the markets right now, and you're seeing an 87 point of an uptick on the Nifty, 20,774 currently. Again, it's the Adani basket that's moving the fastest as far as the Nifty stocks are concerned. Adani Enterprises, Adani Ports as among the top gainers. The banks follow with ICICI, HDFC Bank clearly, and Axis Bank, SBI also among the top movers. Then you also have M&M, Bharat Petroleum as among the top movers. PSU banks, metals, private banks, oil and gas, these are the top sectoral movers at this point in time. Again, as far as the F&O action is concerned, it's Adani Enterprises, Adani Ports and Ambuja Cements, Dalmia Bharat, ACC as among the top movers in the F&O action. Shail, what are you watching in the options trade?
Sakshi, let's drill down. Remember, we had pointed to the 20,700 call on the Nifty, which expires on December 6th. And we had pointed out the price of 128. Well, that call has moved to 169, 167 rupees at the moment. There's a bit of a profit booking here at the moment, somewhere like 153. So that's how the markets are structured. You need to know where to buy the call and till what time to hold it. Should 20,800 be broken, then of course this call will improve further. With that, ladies and gentlemen, we draw to a close on this wonderful day. The Nifty as well as the Bank Nifty are at fresh highs, and we'll be continuing this conversation post 2:30 p.m. only on Business Today television. Do stick around.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.